Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News Show. I've got another of my weekend shows for you and got a lot of great companies to talk about. It's been a pretty busy week or so due to the Beaver Creek Mining Conference, and then tomorrow starts the mining conference in Colorado Springs, the Mining Forum Americas 2025. And I've been looking over a lot of videos from the conference at Beaver Creek. I've got a couple of companies that I'm going to talk about. I took notes while I was going over those companies, and I've got a new pick for you on from the Beaver Creek Mining Conference, and that will be towards the latter part of the show. And yeah, it's been a pretty exciting week with all the news. And even from the Beaver Creek Conference, there's other content creators that also do interviews. So I've been checking out all those. I do all that work, so you don't have to, folks. And I try to summarize a lot of it and bring you the companies that stand out to me. So before I get started talking about companies, I just wanted to quickly talk about gold. As you can see, and what I've talked about a lot over the last year and a half, 2 years, is the probability, and now has transpired, was for it to go from the lower left to the top right of the stock chart, of the chart of the price of gold. This is the futures price. And along the way, I had mentioned that I thought after it broke above 2100 that we'd see a series of record highs, which is exactly what we've seen. In a moment, I'll tell you why I saw that happening. Uh, from this, another thing that I had been pointing out a lot lately prior to this breakout was this basing period, and that it was forming a strong base and ready for a breakout. And I had pointed out this basing period here back in November, December, and January, and then the significant breakout. And this one here back in April, mid-April to around mid-August, and another breakout. And even before that, we had seen gold basing at around trying to get over that 2100 level for a few attempts, and finally it did. And so, from a technical perspective, I love seeing these bases and then rallies, base, rally. This was a particularly strong one because it was at about 2633, and it had ran all the way up to, let's say, 34 and change. So a good 800 dollar move in the price of gold. And as technical analysts will talk about, they say that the longer the base, the more in space, or the higher it goes and for longer. And this was a very significant basing period from April until about second week of August, right around the time when the Federal Reserve had their conference in forget the name now. They have it every year, Jackson Hole, Wyoming, and the talking of getting fairly dovish towards interest rates and the likelihood that they would cut rates, which has me thinking a lot since then about the US dollar. I've been looking at that chart a lot lately, and let's see here. Let me pull it up for you. Um, Trump has talked about his desire to see the US dollar softer so that it will boost exports. Now, that's a double-edged sword to me because if you make exports more affordable with a weaker dollar, you also make imports more expensive. So that's another pillar of what will cause inflation. And he got his wish early in his, from January until about July, it had been in a downturn and had traded pretty consistently below that 50-day moving average. And then it had its own base, a bearish base, if you will. And I had talked about, that this was creating a situation where it would break below the 50-day moving average. It has done that, as you can see in the very corner over here. And I think this is the next leg down, similar to this leg down. I see a lot of reasons to be negative on the US dollar. It's ready to tumble, not rumble, as far as I'm concerned. It's losing ground as a world reserve currency, especially against gold. Not too long ago, it was about 60% of the currency held by central bankers, and now it's dropped well below 50%. And I think that's going to continue and put more pressure on the US dollar, which is very bullish for gold. So I think that it's no coincidence as it's shaping up for a correction that gold is doing the opposite. It's shaping up for a big rally, which has already got underway as it broke out here. And I can see us heading towards 4,000 before the end of the year. And I think we're right on track for 4,000 end of the year and probably 5,000 in the first quarter of 2026. Last year, during the year, I talked about predicting that I thought gold would hit 20,000 within 10 years. And it's right on schedule as far as I'm concerned. And we start seeing 4 to 5,000 in the next 6 months or so. And I think it's right on schedule. Now, I kind of chuckle because I've heard a lot of market commentators that follow gold and consider themselves gold bulls talk about that they are afraid of living in a world of 10 or $20,000 an ounce gold. And I would point out to them that they also said that about $3,000 gold. So we're now at $3,600 gold, and the world hasn't fallen apart. And I want to see it happen because what that'll tell me as the world has come to terms with the idea that the fiat currency and the debt system is broken and it needs to be repaired. And going back to a gold standard of some sort, whether they make it official or not, I think is the best thing that can happen to the world economy. So instead of being fearful of it, I am extremely excited by the prospect because I think that we'll be back to a more sound money and more of a realistic global economy that's not built up on fiat currencies and debt so significantly, and it has some discipline to it. And so, yeah, I'm not in that camp of fearful of gold at multiples of its current price. Um, and so, US dollar is one reason that I think gold and silver will do very well going forward. But what are the a key driver that I see going forward is stagflation. Earlier, I talked about a weaker US dollar will increase the cost of importing stuff into the United States. And the United States, as much as Trump and others want it not to be so dependent on imports, it is an import or based economy. Until that changes, well, you're going to import inflation with a weaker US dollar. And so another is, of course, I've talked a lot about the tariffs. The idea that tariffs will not be passed along to companies and American companies and American consumers, I think is ridiculous. There's been a lot of talk over the last few months that it hasn't been seen yet. And the reason that it hasn't been seen yet is that there was a lot of front running of the to get ahead of the tariffs. So they built up inventories, and over the last few months, they've been working off those inventories. And as those inventories are being worked off, you'll start to see the inflation uh, work its way into the supply chain. And so I think we've got a big bout of significant inflation coming. And then you've got the Federal Reserve that's going to lower interest rates because they see that the jobs market is stalling. And that's not a quarter point here and there is not going to do anything about the jobs market, but it will help add to inflation. So you've got a lot of strong reasons to believe that inflation is going to get more significant. And on the growth side of things, well, the jobs market is stalling and it's in free fall. And when the jobs market is in free fall, the same is going to happen to the economy. Now, whether or not it gets down into a recession or not, still remains to be seen. I think a lot of that will have to do with how aggressive and how soon the Federal Reserve gets back into the quantitative easing business, and how fast they get back towards the free money era. And those things will be just ramp up inflation. So I see stagflation becoming much more apparent to more people. Right now, it's only about, if you use the made up numbers by the government, that understates the inflation and overstates the jobs. I think we're already in stagflation, and based on their government numbers, it's probably about 1 to 1.5%. But you start seeing the economy slow down into recession and inflation get over 3% and move towards 4%. And a lot of people are going to start talking about stagflation. And that's very bullish for both gold and silver. And as you can see, gold is breaking out, and silver has had its most important breakout in the last 14 years since the 2001 to 2011 gold bull market. I'm going to show you the monthly chart here of the futures, and you can see the peak that it made there made a perfect cup, and now it's going up the right side of the cup. And I think that the right side of the cup will exceed the left side if it does that, then there will be a very mild and short-lived candle, and then onwards and upwards from there. So what I'm predicting is I can see $50 gold silver before the end of the year. And then in 2026, we see a series of record highs, much like we saw with gold when it broke out above 2100. Here's the monthly chart for gold. When it broke out above 2100, it's been record high after record high ever since. And I see a lot of the same thing happening with silver. And so I don't think it's any wonder that as I'm seeing these significant breakouts in gold and in silver, that stagflationary pressures are starting to morph into a situation that I think practically every investor is going to be talking about. And so I'm very bullish on silver and gold. The basics of gold that I've been harping on for a long time now is I've highlighted many reports the death spiral of debt. I think that is, well, we know it keeps growing and getting worse. This big, beautiful spending bill that Trump and his cronies came out with will only make that worse. They're spending more money now after the big, horrible bill, the big spending bill, than Biden, who they who they denigrated for his spending. And that's the nature of politicians. It doesn't matter whether they're on the left or the right. They're junkies for debt and spending. And that doesn't change whether they wear the jersey of the Democrats or the jersey of the Republicans. They're all junkies. And but it's coming to a really problematic point now because the cost of servicing the debt is out of control. And of course, the Trump and his ilk want the Federal Reserve to cut interest rates so that it will help bring down the cost of servicing the debt. But if it goes up, if they spend more, it does nothing. And I really think that the cost of servicing the debt is the straw that is going to break the camel's back, the debt camel's back. And so ultimately, I think that the world is heading towards a gold standard. With again, as I said earlier, whether it's an official gold standard or not remains to be seen. But I think it will be a de facto where the central bankers, like the BRICS nations are doing, and others outside the BRICS nations are loading up on gold because they see that the debt and fiat currency system is broken. And here's another point that I don't hear a lot of people talk about, but I think is extremely important when you're thinking about the gold market, is that it took 50 years to break the fiat currency and debt system. When the United States went off the gold standard, it took 50 years to break that debt and fiat currency system. And it's going to take decades to fix that with gold. And what will inevitably happen is that the price of gold is going to be multiples higher so that it covers a larger percentage of the currency that's in the system as well as the debt that's in the system. And so I hear gold bulls get kind of fearful of heights, and many are always looking for a leg down. But I don't think that they really understand that what's happening here is that the death spiral of debt and the cost of servicing the debt is forcing the world to go back on a gold standard because the fiat currency and the debt system is broken. And it took 50 years to break it. So it's not going to take a couple of years to fix it. It's going to take many years, decades, a few decades, and gold multiples higher than its current price. Now, by far, the best way to play that is with gold and silver stocks. Because even though the price of gold has moved up and the price of silver has broken out recently, the value propositions in the gold stocks are still extremely attractive. Take, for example, Agnico Eagle. After they put out their second quarter um, uh, report, I did a comparison to Agnico Eagle and Tesla relative to their free cash flow. Now, at that time, Agnico Eagle in that quarter, they were multiples higher in free cash flow than Tesla, but they were trading at a fraction of the valuation of Tesla. So this is kind of a ultimate example to me that investors have driven up the price of a lot of these household names on Wall Street and are pretty much, even though I'm going to show you the chart in Agnico Eagle, even though it's moved up, let's have a look here. I picked them way back here when they were in early 2024, when they were trading at about $60 a share. And on Friday, they closed at $212 a share. So it's up multiples of where it was when I first started talking about it. But I make the argument that it may actually be cheaper now than then. And what I mean by that is if you use a free cash flow analysis, they keep on making record after record of free cash flow. And while doing that, they're building up their cash position. And so when you look at free cash flow and their cash position, there's a pretty compelling argument that this is still very early in the ultimate performance of Agnico Eagle. And this doesn't even really factor in that, four, five, $6,000 an ounce gold. I mean, it's hard. The price of a lot of gold miners are hardly even pricing in, let's say, $2,500 an ounce gold. So, I think that, that they are offering tremendous value propositions. A lot of the gold miners. You look at Newmont. Okay, so for Newmont for a long time was a chronic underperformer relative to not only the major gold miners, but even smaller mid tiers. And why they were an underperformer was for a long time they focused primarily on bigger is better. And what they have found now, which has led to them being one of the best performing stocks in the S&P 500, is because they're realizing that when it comes to gold production, bigger is sometimes not always better. What is better is bigger free cash flow. And so what they've done is they sold off a bunch of their non-core assets. And by doing that, they are producing less gold, but they're doing a better job on optimizing their tier one mines. And so producing less gold, but making more free cash flow. And that's what it's all about to me when I'm looking at any company in any sector is how are they growing their free cash flow and what are you paying for that relative to that free cash flow. And this gets back to what I've already said a couple of times that the gold miners create tremendous free cash flow are tremendous value propositions because of the free cash flow that they're making today with the price of gold today. But going forward, they're making more money quarter after quarter after quarter as gold keeps going up. And if it keeps going up, they're going to make even more free cash flow. These companies are going to be sitting on so much cash that it's going to boggle many people, maybe not the gold bulls, but it will boggle the mind of many generalist investors to the point that they won't be able to ignore them for very much longer. Now, I just talked about the only two major gold miners that I have in my as picks. And not too long ago, I added Pan American Silver to my pick. It was down around here when I really felt that this breakout was important, and I also think that investors want to start positioning themselves for when silver starts doing what gold did after it broke out above 2100 and set a series of record highs. You saw what that did to Agnico Eagle's stock chart, and I think you're going to see a similar thing happen to Newmont, or I mean Pan American Silver's stock chart when silver goes over $50 and starts creating a series of new record highs. I mean, it's already starting, folks, but I think when we look back next year around this time and we look back, we're going to see something similar to when I look back now, when I first started picking Agnico Eagle when they were trading at $60 a share and are now at $212 a share. what is that, 3.5 times. I think that that's the kind of performance you're going to see in Pan American Silver. Even though silver has not made its record highs, they're sitting on, I think it's $1.2 billion of cash and only about 750 million of debt. And so they're becoming a cash hoarding machine. And that's before silver goes over $50 and starts setting a series of record highs. So Pan American Silver is my only major silver mining pick. And I think it's another example of tremendous value proposition. Okay, now I'm going to go into my mid tiers because as you go down the food chain, the value proposition gets even better. Look at Alamos Gold. Okay, so I picked Alamos Gold around the same time that I picked Agnico Eagle. Back in early 2024, they were trading at about $15.50. They traded Friday at $45.63. So that's a triple. Both Agnico Eagle and Alamos have significantly outperformed the, the price of gold. And that's why you own gold stocks that are best in breed. In the case of Agnico Eagle, they're the best in breed for the major gold miners based on their free cash flow growth, what they're doing to increase their production and bring down their costs and replace what they mine. They're firing on all cylinders. They're a great, extremely well run major gold mining. But Alamos Gold is a much smaller company with the same characteristics. And they are also a free cash flow machine relative to how much gold they produce. But what really excites me about Alamos, is that Alamos is using the free cash flow to basically double their production while also bringing down their costs so that they'll be producing gold at about 300 or more dollars below the average cost of producing gold for gold miners. This will make them what I think is our current bull market in gold version of Gold Corp, which was our the one of the outperformers of all of its peers during the last great bull market from 2001 to 2011. And so Alamos is my current Gold Corp pick, if you will. And I just I can't stress enough how bullish I am on the way that they're spending their free cash flow, pumping it back into the company, into the business to double their production while also bringing down their costs. This, I think, is going to make them a tremendous performer and offers tremendous value that is not, again, not being recognized. Okay, so now I'm going down the food chain to Equinox as far as size goes. And Equinox, as you can see, has broken out quite dramatically. They're really a beast. They're in beast mode. And I made them official pick back when they were just getting above their 50-day moving average. And although I have talked about them on past shows, and why I made them an official pick was because they brought in a new CEO, Darren Hall, who is a very talented gold miner. And they were having problems ramping up. They had some issue growing pains while bringing their Greenstone mine into production. And because of that, they were getting punished over here. From here to here was when they started talking about some of the challenges that they were having. Darren Hall came in and almost immediately fixed those problems at Greenstone And now they're also bringing their Valentine Lake mine or Valentine mine in Newfoundland into production. And so those two new mines will make them, I think it's the third largest or second largest Canadian gold mining company. And as they do that, they'll be able to bring their costs down and make a lot of free cash flow. And so I think that they were a turnaround pick back here, and they have started the turnaround, and they're basically doubling their production as both Greenstone and Valentine mines get into full commercial production, and that those two mines are going to make them a free cash flow machine. And I think they've got a very bright future ahead of them. Now, Orla Mining is also a mid tier, and I've been talking about this company for a few years. Back when I think I started talking about them when they were only a couple dollars a share, and they closed Friday at $16. They've been kind of going sideways. They had some issues. They had some heavy rains at one of their mines that brought down some of the a temporary wall at their mine into the pit. Nobody was hurt. No environmental damage. They're going to be able to mine that material, and the stock got hammered down, but I'm not concerned about that because they're not just a one mine company. In addition to their Camino Rojo project in mine in Mexico, they've also got the project up in Ontario that they bought from Musselwhite that they bought from Newmont when Newmont was selling its non-core assets. And then they've got the railroad mine or railway, I always mix up that name, down in Nevada. That's their next property. And this company is also a acquisitive company, so they could be in the mergers and acquisitions business and maybe take advantage of some of these value propositions down the food chain that I see, and I'm going to talk about uh, in this report. But nonetheless, I really like what I see from their mine in Mexico and in Ontario and the new one in Nevada. And I think this company will be continuing to increase their production and bringing down their cost. And collectively, that will make them a very attractive company. I think that they have been basing for the last, let's say, since April, but I think they're just on the verge of a substantial breakout and higher from here. All right. So now I'm going to look down the food chain at other picks that I've talked about and that I think are offering tremendous value propositions. One of those is Goliath Resources. And I've been talking about Goliath since they were a 60 cent a share stock. They're currently trading at $2.85. And the thing that really stands out to me is if you look in their last news release and in their corporate presentation, you're going to see an image of a of the gold mountain that they have. That's what I'm calling it, gold or golden mountain. That's just loaded up with visible gold over a very large area, widespread visible gold occurrences in their drill holes. And this makes them very unique, very rare. You don't usually see companies with that wide of a distribution of visible gold. And what's also very compelling about them is the way that as they, like when they first started up high in the system or near the top of the mountain, let's say, the gold, visible gold was very fine grained and sort of sporadic. You'd see a little bit here and there. And as they've been drilling down deeper into the system, The gold is getting more coarse and more abundant. And I don't even think that they're near, I think they still have a ways to go before they actually hit the source of where all that gold is coming from. And when you look at the gold, visible gold being so widely distributed, like from side to side, you're looking at almost 1,000 meters. And from one end to the other end, you're looking at like 1,500 meters. And throughout there, in that area, is visible gold in all the drill holes inside of that area. It's phenomenal. And when I sort of look at that and base it on my 32 years in the mining business, I can't remember any project having that much visible gold in it. And to me, I think that they've got the next most important gold discovery in the Golden Triangle at a minimum since the Brucejack mine that Pretium, my viewers and listeners will remember Pretium because I picked it when it was around a $3 stock and it got bought out at $19 because of the tremendous success they had at their high grade Brucejack mine in the Golden Triangle. But the greatest one is the Eskay Creek mine in the Golden Triangle. I don't know if you can fairly say that it's going to be more important than that, but I will say it's heading in that direction. And if it's heading in the direction of a Brucejack or an SK Creek, then even at its current valuation, it's still underappreciated in a substantial way. So this is another of what I consider a tremendous value proposition as you go down the food chain. Another is Vizsla Silver. Vizsla is a sponsor of my reports, and I am really happy to have them as a sponsor because they started out as a sponsor when they were trading, let's say, at about $1.50. They're currently trading at $5.36. And I believe that based on the quality of the asset that they have at their Panuco project, and you can please do your own homework and look at their preliminary economic assessment and look at the numbers in that preliminary economic assessment. It was done with a base case and using the base case gold and silver prices that are much lower than where we are today. They had an 85% IRR as a base case. If you use current numbers, that IRR goes over triple digits. And in the base case, they were talking about a 9-month payback of the $225 million capital cost to build the mine. Well, again, if you use more current numbers of gold and silver, now that is just a few months, 3 or 4 months of production to pay back the capex. Now, think about that, folks. That means that they'll be creating about 200 to $250 million of free cash flow per quarter using the current prices of gold. That would make them have a free cash flow of like $1 billion in a year. They're only trading at a couple, 2.5 times that, and they're only a couple years away from 1.5 times that, and they're only a couple years from starting to pour the silver and start generating that free cash flow. This is just another example of what I'm talking about when I say that the gold and silver stocks are still offering tremendous value propositions, and the generalists haven't even picked up on it yet. Even the bulls on gold and silver haven't picked up on how much. Some of them haven't sort of run the numbers and realized, man, that is just phenomenal free cash flow that these miners are making. And the next wave of the new miners, the new mine developers, are coming into a perfect storm for building new mines. And so I think that that's going to increase the value of developers. And that used to be you kind of something you stayed away from because it was called in the Lassonde curve. There was a big move when a company made a discovery, and another big move when they start mining it. But in between those was the Valley of Sin or the development discount window. And during a bear market, those companies would dip down to really low valuations. But in a bull market, that part of the Lassonde curve, actually the entire Lassonde curve needs to be reconsidered because if you make a discovery in a bull market, the run is going to be more substantial. On the left side of the Lassonde curve and on the right side, and the Valley of Sin or the development discount window will not be as much punishment. And as they get closer to the end of the development discount window, they'll start to ramp up and run up the right side of the Lassonde curve or the right side of the Lassonde curve. So I see a lot of great things happening for the explorers with important discoveries like a Goliath that I already talked about, which is my highest conviction gold explorer with an important discovery, or a Vizsla Silver that's only about a year and a half or so away from having a silver mine being developed and turned on. And the next company is Amex Exploration. Now, Amex Exploration has an extremely exciting project in Quebec that has what is called the Champagne Zone on it. And the Champagne Zone has a resource of about 850,000 ounces with an average grade of 16.2 grams per ton gold. You don't hear about that very often anymore in any developer. They also have about another couple 100,000 ounces in inferred that has an average grade of just about 10 grams per ton of gold. And when they converted some of the gold from inferred into measured and indicated in the Champagne zone, they not only did the amount of gold increase, but so did the average grade. So I'm really optimistic that they've got a 1 million plus ounce resource at their Champagne zone, and that it will have a very high grade, much higher than most gold projects that are in development. Then they have other deposits around there that collectively make for about 2.5 million ounces of gold. They'll start with the Champagne zone and the plan and what helped them go from this low of around 80 cents to its current price of $2.66 was when the company started communicating that they were going to bulk sample that Champagne zone. And because it has such a high grade, a lot of times when a company is bulk sampling, they're kind of swapping dollars for dollars or even a dollar for 80 cents because they don't have their own mill on the property and the grade is lower. In the case of having 16-gram gold to do a bulk sample on, they will be in a unique position to possibly make money on their bulk sampling. And then they want to bulk sample their way towards a toll milling arrangement. So instead of building a mill to extract the gold from the rock on their own property, they're doing an economic valuation of having that gold milled at one of the nearby mines that are needing more material to mill. They're under capacity. And so No, a lot of companies would like to do that, but they can't do that because they're not in the right area. In the Abitibi, there's mines all over the Abitibi, mills all over the Abitibi that need more feed. And so they're doing an economic evaluation to assess toll milling at a nearby mine. And then the idea is to use that profit from the toll milling to then build their own mill on the Perron project of that they have in Quebec. And so they've got a runway to near-term production. And as they've been talking about that runway, you've seen their stock move up quite nicely. Went through a golden cross here. Trajectory of the 50-day is quite handsome, and they've got a lot of catalysts ahead of them. And so stay tuned. They're a sponsor of my reports. I'm really happy to have them as a sponsor because they enable me to do the work that I do and be able to offer that to my audience at no charge. And another reason is I like the idea of my audience having a front row seat to the success that a company like an Amex will be as they keep moving forward in developing their Perron project in Quebec. And so for those things, I'm thankful. But keep in mind that they pay me. They don't pay me for my opinion. My opinion is based on my 32 years of experience. They do pay me to sponsor my work, but that doesn't cloud my judgment or how I look. I look at every company, whether I'm a shareholder, they're a sponsor, or they're just a pick that I don't have any affiliation with as a shareholder or as a sponsor. I look at them all under the same microscope and try to present them in the same way. Now, sponsors, I keep on top of them with interviews more often than non-sponsors, so I'm more informed. But it doesn't change the microscope of what I look at when I'm looking at companies. All right. Now, Norsemont, I think that this is a phenomenal value proposition. And why I say that is they've got a 2.7 million ounce resource on their property in Chile. And not long after the Chilean government talked about bringing permitting down by 75%, they started to come to life. And even though when you do your research on the company, you'll find that they already have mine permits in place that are protected under presidential decree. Okay. So they've already got mine permits. They do need an environmental permit that could take 1 to 2 years. But, depending on how progressive the Chilean government is on permitting, that window could be brought down to, I'm guessing, maybe even as much as low as 8 months. So that's a near-term opportunity to mine. They've already got the permit to mine. They've got the mill, or the ADR plant. They got permitted tailings areas so that they can produce gold from the oxide deposit. But another thing that I don't think is really well understood about their resources, about 2.25 million ounces is in what is called sulfide gold. Okay. Now, not all sulfide deposits are created equal. And what I mean by that is that sometimes sulfide gold can be contained within a sulfide, so encased in it completely. Think of like an egg. The yolk is the gold and the shell is the sulfide. And so, in order to get that gold out of that kind of sulfide deposit, you need to heat it up and you need pressure to extract that gold from that sulfide mineral. This is called refractory gold, okay? In the case of Norsemont, they actually have done a technical study that is on their website that you can go and read. And in unoptimized metallurgical work, so think of it like the first time you sort of do some metallurgical evaluation, it's noted that 60 to 70% of that gold is actually attached to sulfides, not encased inside sulfides. So with an inexpensive metallurgical test that's more optimized, they can come out with the hard data that talks about how this gold is much more like free gold, at least 60 to 70% of it, than it is like refractory gold. So that's very exciting because that can open up the possibilities of easy extraction, easy metallurgy on that 2.2 million ounces of sulfide resource on their property. Now, what is phenomenal about this project is that that 2.7 million ounce resource, whether you look at the sulfide or the oxides or the sulfides, is all within 80 meters from the surface, and it has a mining permit. Okay, so and another thing is the style of deposit, the gold comes up vertically in placement, or like straight veins coming straight up, okay? And the drilling that was done to assess that 2.7 million ounce resource was with vertical holes. That is not the optimum way to drill off that kind of resource. So by doing some well-placed angled holes, they can start to increase the resource inside the envelope that they have. And I think they can make it a maybe even double the current resource. Just in the first 80 meters or so with strategically planned drill holes that cut across the vertical drill holes that they've drilled. And so, you then think that this company only has about a $50 million Canadian valuation, and they just raised $6 million from the likes of Rob McEwen, Dr. Quinton Henney, Crescat Capital, Larry Lepard, Paul Matisic, and others. And now they got the cash to go in and do metallurgical work to assess this sulfide situation that I talked about, to also do extensive drilling, and not they don't even just have they're not they've not hit the limits of the deposit. They've only drilled down about 80 meters. These epithermal veins, they come up vertically. So the depth of those below 80 meters is still wide open. They also have breccia pipes that only have a few holes into them that have not been followed deeper. And following the breccia pipes and the veins is a great way to find the porphyry that they came from. So this entire porphyry and epithermal vein system is wide open to grow dramatically. And I think that's exactly what it's going to do, because if you look at their project, they actually have about 8,000 meters of alteration by about a kilometer of alteration, a corridor of alteration. And you get alteration when the gold bearing fluids make their way up and interact with the country rock, it chemically alters that. So when you see these big areas of alteration, it's suggestive of a very big system. Another thing that's suggestive of a big system with the porphyry sitting underneath it is there's a area, let's say about 2 kilometers in diameter, that is uplifted, like it's doming above a porphyry that pushes those rocks up and creates like a dome. And there was historical mining on the top of that dome and drilling, but not to depth. And so Norsemont as a junior explorer with a resource that can grow, it is a tremendous value proposition. All right. Another great value proposition is Aris Mining. I'm going to bring their stock up. This is a Toronto Stock Exchange listing. And I made them a pick when they came down here to the 50-day moving average, and they moved up a good 30–40%. But folks, I didn't pick them because I thought that they were going to have a 30–40% breakout. I picked them because I think that they're going to trade much higher than where they are today. And when I say much higher, I mean multiples. I don't mean 30–50% higher. I'm talking about multiples. Now, why do I say that about Aris Mining? Well, they're doing the work to increase their mill capacity by about 50%. They already have a free cash flow machine at their Segovia mine in Colombia, and it's performing extremely well. And now they're going to increase their mill throughput. So that's just going to help their free cash flow even more. Then they got another project two more projects that are in the pipeline to be mines of the future. And I see this mid tier of Eris growing into a very large mid-tier gold miner because of the free cash flow that they generate and what they're doing to increase their production and the pipeline that they have to keep doing that long into the future. Now, it's also worth noting that the management, Neil Woodyer, that runs the company, he's done this before. It's not his first rodeo, if you will. And so I think this is going to be his swan song or his next big success. And I'm really liking what I see with Aris Mining, and I love what they're doing to increase their production, increase their mill throughput. That will only lead to more free cash flow. I'm very bullish on the way the Segovia mine is operating and the potential of their other mines that they'll bring into production. And who knows, this company could grow to the size that they can start looking at being an acquirer of other companies that are offering tremendous value propositions. So yeah, and they're sitting on a bunch of cash. So it's not like they have to go to market to increase their mill throughput. They're paying for it out of cash in the bank. All right. That's my Aris story. All right. Golden Cross is a pure grassroots explorer. Okay. So some would say, well, how do you call a pure grassroots explorer a value proposition? They haven't even announced drill results yet, Alan. Are you sure what are you smoking there, Alan? I'm not smoking anything. Why I think that they are an underappreciated and good value proposition as an explorer is where they are. They're in not very far from one of the greatest orogenic gold mines in the world called Fosterville, if not the greatest. And it just spews cash, okay? It's what brought Kirkland Lake to be the big success it was and ultimately get bought out in the billions because they were the operator until they got taken over. All right. And so Fosterville is a beast of a free cash flow machine of a mine. So the best place to look for a beast of a free cash flow machine of a mine is not very far from it. And that they're about 30 kilometers, and in geological terms, that's right next door. So, what are the characteristics that are important? So in an orogenic gold system, you need very old rocks. They're called Archean or greenstones. All right, greenstone belts, and that's what is on Golden Cross's ground. All right, Then you need the cracks in the earth or faulting that allows the gold that starts its journey sometimes over 10,000 meters below the surface, where the pressure and the temperature is perfect to have that gold then inject up through those faults or cracks in the earth and make their way towards the surface. All right. And so they've got the faulting or the cracks. That's in so box one, box two. Then you need high grade gold. Okay. And so on their property, they know there was high grade gold on the property because I'm just spitballing it, but there must have been at least 100 locations of historical mining where the small scale miners would go in there and basically dig holes and create adits to go after this high grade gold. And you can imagine when you were doing that in the 1800s, when gold was like 20, $30, it's got to be very high grade in order to make your labor worth it. And so they've got all these pits and all these adits and all these showings and waste dumps all over all over key parts of their property. So we know tick that box. Now, here's where it gets really exciting because one of the areas that they have all this historical mining on it and where they're drilling now, by the way, about let's say 2,000 meters from that, Southern Cross, which is another pick of mine that currently has a $1.5 billion valuation as an explorer, has made what looks like a Fosterville type discovery. Now, I'm not saying they got the next Fosterville, and nor do they need to have the next Fosterville to have a very successful story that leads them to a 10 billion plus valuation. I'm talking about Southern Cross here. Um, uh, they're only 2,000 meters away. And guess how they found that? They went to an area where there was significant historical mining. And that's where they made their discovery, which is about 2,000 meters or so, give or take 500 meters from where Golden Cross is drilling. So when you take all of those things into consideration, I've heard some so-called experts say that, oh, Golden Cross is a good drill punt, if you will. When you say that, it's like you're rolling the dice and it's a huge gamble. Well, when you're in an area like that and you've got all of these geological characteristics, it's much more than a drill punt, if you will. I think they're going to make an important discovery and probably several important discoveries. And so when you look at their current valuation of under $100 million Canadian, well, that's a very attractive opportunity, especially when they're sitting right beside a company with a $1.5 billion valuation that I think is still undervalued. And they're not very far from one of the greatest orogenic gold mines in the world. That's the Golden Cross story. All right, next up is Nuvau Minerals Corporation. NMC is their symbol. I'm a shareholder of this company, so terribly biased. But why I am a shareholder, I think, is worth talking about. Um, they've got a 1,300 square kilometer property in the Abitibi region of Quebec. Abitibi is one of the greatest gold mining camps in the world. All right. And but this particular property that's 1,300 square kilometers was never explored for its gold potential until recently. The reason was is that until 2022, this project was owned by Glencore and other base metal miners had owned it before Glencore, and it has been in production for like 60 years. And but it wasn't a core asset for a company like Glencore. So Glencore was looking for a junior to take it over. And because they knew the chairman, Ewan Downey, very well, they were able to strike a deal where Nuovo was able to get the 100% interest through options that they still have to do, but they've done a certain amount to them to take 100% interest in that project. And so it has underground workings at the Brace-Mac McLeod mine that are still, the deposit is still open. The underground workings are ready to go. That is one growth engine. Then they have other deposits on this huge land package for base metals. So bringing that back into production is one growth engine for them. But another is that at that same Brace-Mac McLeod underground workings, in the past, it was noted that there was a vein right at the edge of the underground workings, a quartz vein with gold in it. But no, Glencore never followed it up because they weren't interested in gold. Well, right about here, Nuovo drilled a hole into that quartz vein and found it loaded up with visible gold. Making a gold discovery is hard enough. Making a gold discovery with a bunch of visible gold in it on your first hole is very unusual, very, very rare. Making that a unique discovery in the Abitibi. So when people hear gold discovery in Abitibi, they pay attention. And their stock went from what, like 30 some cents to just about $1. And they're drilling more holes to follow that up. So that's another growth engine is their gold potential on a 1,300 square kilometer property in the Abitibi that's never been drilled for gold. And now they have made a discovery, which opens up the entire 1,300 square kilometer property. So those are the growth engines of Nuvo bringing the base metals back into production. They've got all the infrastructure, they've got the mill, they've got the permits, they've got the community on side. The community is full of miners that have to go away for 2, 3 months or 2, 3 weeks at a time to fly out to other mines and then come back home for 2 or 3 weeks. They would much rather sleep in their own beds and drive to Nuvo's mine nearby. And I think that that makes, already great province of Quebec mining friendly, even more mining friendly. And so that's another of my tremendous value propositions. All right. So now I'm going to talk about McEwen Mining or McEwen Inc., sorry. They've really broken out of late. Down here, they were trading at about $7. This is the US listing, so these are US dollars. Traded at about $7. And as they've been moving towards completing a feasibility study on their world-class copper development project in Argentina called Los Azules, they've been getting more attention, and that has basically doubled their stock price of late. And it went through a golden cross here. It's trading significantly above their 50-day moving average, and the trajectory of the 50-day moving average is extremely bullish. Now, they're not just seeing catalysts from their Los Azules copper development project in Argentina. They've also got a gold mining operations that produces, let's say, around 135,000 ounces this year that they're working towards ramping up to over 200,000 ounces over the next couple of years. And they've been having a lot of success with their drilling. They recently broke ground on a new mine called the Stock Mine which will help them increase their production and bring down their costs. And so when I use them as an example of a tremendous value proposition because I've done a lot of research on what the valuations are for gold miners based on about 100,000 ounces of annual gold production. And they generally, or the range is from about $800 million of valuation to over $2 billion of valuation for each 100,000 ounces of gold production. Okay. And this company is trading at a discount to that right now, let alone the prospect of increasing the production and bringing down their costs. Now, currently, they produce gold for more than the average cost of the average miner. And these kind of things are very leveraged to the movement in the price of gold. Let's say they're producing gold at around $2,000 an ounce, where the average miner is producing it at about $1,500 an ounce. Well, when gold goes up, that goes directly to their bottom line at a higher percentage terms than the low cost producer. And so they got a lot of torque to the price of gold going up. Now, when you have a higher cost producer, what you want to see is that they're making the efforts to increase their production and bring down their cost. And when you get that triumvirate, if you will, where they are a producer and they're increasing their production and they're bringing down their costs, that makes for a very exciting proposition. And this is, I think that they're undervalued just for their gold project alone, not even, and that attributes a zero value to their copper project, world class, top 10 undeveloped copper project in the world in the lowest cost quartile. You know, that's worth a lot more than zero. So they're trading at below what they should for a gold miner based on their production and their peers. And that gives you just a zero valuation for their copper. And so this is an example of what I call a tremendous value proposition. And it's really encouraging to me that it's now starting to be realized and recognized in the market because as I said earlier, they've gone through a golden cross. They're trading well above their 50-day moving average. The trajectory of their 50-day moving average is tremendously bullish, and they got tons of catalysts coming up from their gold mining operations, from their copper project. They'll have lots of news to talk about development at all their properties. And so that makes for a very compelling value proposition. Now, when I started this show, that's run much longer than I anticipated, I intended on talking about a couple of companies from the Beaver Creek conference that did presentations, and I took a bunch of notes, and I have about 10 of those to talk about. And I was going to talk about two of them today, but this has run longer than I had anticipated, and one of them is a brand new pick. Um, and ah, Let's run it longer. Let's do it overtime. Okay. All right. So one of them you already know about, which is Sierra Madre Gold and Silver. And I'm going to make it fairly quick because I've already talked about Sierra Madre in the past, but I'll go to my notes here from their presentation at Beaver Creek. And what stood out to me was the efforts that they're making to increase their production. Okay, so that's one thing. But what really is overwhelmingly impressive to me is the exploration potential that they have on their property. What they have is a network of veins that are high grade gold and silver. But really, they've been focusing their production and their increase to production on only a few of those veins, whereas the rest are wide open. Even the ones they are producing on are still wide open. And so that is a very compelling story for a junior gold silver miner that has a substantial exploration potential. And I think that they will continue to make important discoveries as they're mining and replacing what they mine with new deposits to be future mines. And you never know in these network of veins. Nothing can tell you that they are already mining the best ones. Those could be down the road. So we got to watch their exploration activities very closely. But as you can see, they made a nice breakout due to this presentation at the Beaver Creek Conference. There's a lot of influential people there, and it was a very compelling presentation of, again, what really stands out to me is the way that they can increase their production and also the phenomenal exploration potential that they have. And it's on a project that's under drilled. It needs a lot more drilling. And this is sort of gives you two kicks at hitting it out of the park. One is as a junior gold and silver miner, but secondly, as an explorer looking for more to mine. That's that's something that stood out to me. Insiders own 21% of this company, so that's an important category. Currently, they are renting their equipment and to mine what they're mining now. And so that adds to the cost of mining, right? So as they're making free cash flow from from their mining operations, they're buying equipment and so it's going to be owner operated equipment, not rented equipment. So that will help to bring down their costs of production. And so, what their current efforts are, those are some of the things they're doing to bring down their costs. And their effort is to grow themselves into about a 2 to 3 million ounce silver producer, annual silver producer, and with where I think the price of silver is going, that's a silver equivalent because they produce both gold and silver. That's going to lead to a lot of free cash flow for a small junior miner such as Sierra Madre Gold and Silver. So those are some of the highlights of what stood out to me from their presentation that was very well received at the Beaver Creek Conference. And so do your homework on Sierra Madre Gold and Silver. Now I'm going to close the show with a brand new pick that nobody that has heard about from me. And that company is Mithril Silver and Gold. Look at this company. Just started trading back in late 2024. Patchy trader. Some days it doesn't trade. It trades on very low volume. Hardly can make a stock chart out of the company. So why am I all of a sudden? Well, the first things first. I think that they have such a compelling story that they just need some coverage. So I want to be one of those covering the company. So what stood out to me? All right. So they got a high grade gold and silver project. And I looked at the drill core and it's got, it's an epithermal vein system. And hold on a second here. I just got to do something. Let's just pull up their website. So front run you guys and help you do some homework on them. Mithril, considering that their stock chart is so quiet and patchy trader, let's pull up their website And while I'm talking about it, um, there's their website, mithrilsilvergold.com. So hold on, let me go back to that home page. So as you can see, they talk about exploring one of the highest grade districts in Mexico's prolific Sierra Madre gold and silver trend. So all the mining, or virtually all the mining in the Sierra Madre belt comes from epithermal veins. All right. And so and I live in Mexico. I live in central Mexico in a place called Zacatecas, which is one of the most famous mining jurisdictions for epithermal veins in all of Mexico. 10% of the silver ever produced worldwide comes from the state of Zacatecas. That's throughout mankind, folks. And all of that mining of silver is done from epithermal veins. So I lived here for a decade. I've been studying these epithermal veins for a decade. And something that I looked for was in their presentation. And I don't want to get too technical about it, but there is a certain kind of textures in the veins that's important for having important silver and gold in those veins. And they have those textures they showed it in their presentation at the Beaver Creek conference. And so I'm tremendously excited about that project. I think that again, that this brand new traded company, the only thing it needs is some coverage or some love from a guy like me. And I'm the kind of guy that's going to do that. And let's just quickly look at some of their news, if my internet will cooperate with me. Uh, it's not cooperating, folks. Could be my internet. It's been being a little bit patchy on me. Okay, so we'll have to here's their Mithril project. And it's not far from Tahuahito, which is very exciting. As you can see, look at all the mining. These are all past mines. San Dimas is here. Panuco of Vizsla is over here. Durango is over here. Where Fresnillo is about 30 miles from my house. Um, there's and right beside Fresnillo is Zacatecas. These are all the mines in Zacatecas State around Fresnillo. And look at it, just basically keeps on going right up to the border of the Sierra Madre and into Nevada. And epithermal veins are all over the place on this. Um, and it's got, so there was a maiden resource on this, 691,000 tons at 5.43 grams per ton of gold, 114 grams of silver. So this is a gold and silver rich epithermal vein system in Mexico. That's the story, folks. Do your homework on it. They're only trading at about 55 cents and they kind of trade by appointment. So it's one that's worth doing your homework on. I think I'm going to have a lot to talk about with this company. I'm going to try and reach out to their management to do an interview. But that's the show for today. As always, do your homework. Speak with your financial advisors before making any investment decisions. Important for you to do your homework. Speak with your financial advisors. I always stress that doing your homework thing because I think that a well-informed investor is one that makes smart investment decisions that are not based on short-term fluctuations in the stock price that become emotional. And no matter what sector you're in, you want to be well informed and do that homework. Okay, have a great day. We'll talk to you soon. Adios.